Your bank sent you a statement last month. You probably glanced at it for 3 seconds. Maybe you didn't open it at all. That was an expensive mistake because buried inside that document, in tiny font, under vague category names, are charges you never agreed to, fees you've been paying for months, maybe years, and your bank is counting on the fact that you'll never look closely enough to notice. The average American pays over $250 a year in bank fees, not interest, not big purchases, just fees, small, invisible, automatic. By the end of this video, you'll know exactly how to read every single line of your bank statement. You'll know which charges are legitimate, which ones are optional, and which ones you can get refunded today just by making a phone call. Let's get into it. Here's something your bank will never tell you in a commercial. They don't make most of their money from big transactions. They don't need to. They make it from volume, millions of customers, small charges, every single month, quietly, automatically, forever, until you decide to stop it. And the bank statement? That's the one document that shows you everything, every fee, every charge, every transaction, right there on the page. The problem is, most people were never taught how to read it. Think about it. You spent years in school. You learned algebra, you learned the water cycle, but nobody ever sat you down and said, here's how your bank makes money off you, and here's how to stop them. That ends today. A 2022 report from the Consumer Financial Protection Bureau found that U.S. banks collected over $15.5 billion in overdraft and non-sufficient funds fees in a single year. $15 billion from regular people, like you, like your parents, and the majority of those charges hit the people who could least afford them. So whether you're checking a basic savings account, a joint account with your partner, or a business account you've had for years, what I'm about to show you applies to all of it. We're going to go line by line. We're going to decode every section of that statement, and by the time we're done, you'll look at your bank the same way you'll never look at a magician the same way after someone shows you the trick. Open your bank statement right now, or pull it up online. It doesn't matter. The first thing you see is the header, and most people skip this. That's the first mistake. Look at the statement period, which tells you exactly which dates are covered. Sounds obvious, right? But here's why it matters. If your statement period ends on the 28th of the month and you made a transaction on the 30th, it won't appear here. It'll show up next month. And if you're trying to track a disputed charge, getting this date wrong can cost you weeks of back and forth with customer service. Next, look at the account type. Is it a checking account, a savings account, a money market account? This determines which rules apply to you, including fee structures, interest rates, and withdrawal limits. Here's something most people don't know. Some banks give you a different account type than what you asked for. You signed up for a premium checking account, but somewhere along the way it got quietly downgraded. Same account number, different fee schedule, higher monthly charge. Check the account type every single month. Then look at the account number. Only the last 4 digits are usually visible for security reasons, but make sure it matches, because if you have multiple accounts and you're looking at the wrong statement, every calculation you do from this point forward is wrong. This takes 30 seconds, do it anyway. Right after the header, you'll usually see a summary box: opening balance, closing balance, total deposits, total withdrawals. Your bank loves this section because it's designed to make you feel like everything is fine. Big number in, big number out, net balance looks okay, move on with your day. Don't move on with your day. That summary tells you what happened. It does not tell you why it happened, and the why is where the money is hiding. Here's a real scenario. Let's say your opening balance was $2,000 and your closing balance is $1,800. The summary shows you made $1,000 in deposits and $1,200 in withdrawals. Looks normal, right? But what if $200 of those withdrawals were automatic fees you didn't recognize? What if $50 was a maintenance fee you could have waived? What if $30 was an overdraft fee that triggered because your paycheck deposited 2 hours after an automatic payment cleared? The summary doesn't show you any of that. It just shows you the number went down. That's the point.
Here's what you should actually do with the balance summary. Use it as a checkpoint, not an answer. The opening and closing balance tell you whether the math adds up. If you add all the deposits and subtract all the withdrawals from your opening balance and don't arrive at the closing balance, something is wrong. Flag it immediately, because that almost never happens due to bank error, but when it does, you are legally entitled to a correction. This is the main section, and this is where most people's eyes glaze over. Don't let that happen. The transaction list is essentially a receipt for your life. Every coffee, every subscription, every transfer, every automatic payment, it's all there. But here's the thing most people don't realize. The description column is not written for you. It's written by whoever processed the transaction, and they're not thinking about whether you'll understand it 6 weeks later. So you'll see things like ACH debit, Amazon Marketplace, or POS purchase 4492, or MISC fees, see terms. What do these mean? ACH stands for Automated Clearinghouse, a type of electronic transfer. When you see ACH debit, money moved out of your account automatically, usually a bill payment or subscription. And when you see ACH credit, money came in, usually a direct deposit or refund. POS stands for point of sale. That's a debit card transaction, something you physically paid for with your card. And the number after it is the merchant's terminal ID, which can help your bank trace the exact location if you don't recognize the amount. And MISC fee, see terms? That is your bank politely telling you they took your money and buried the explanation in a document you agreed to 3 years ago and definitely did not read. Here's your action step for this section. Go through your last 3 months of statements, and for every single transaction you cannot immediately identify, write it down. You're not looking for fraud yet, we'll get to that. You're just looking for patterns. Subscriptions you forgot about, services you're still paying for that you stopped using, automatic renewals that hit once a year that you've been paying for 4 years. Studies suggest the average person has 3 to 5 forgotten subscriptions active at any given time, and at an average of $12 a month each, that's up to $720 a year on things you're not using. That money is yours, and you can get it back starting today. Now we get to the part your bank hopes you'll skim. Most bank statements list fees in a dedicated section or sometimes scattered throughout the transaction list with labels that are designed to be forgettable. Here are the most common ones you'll find and exactly what each one means. Monthly maintenance fee. This is a flat fee just for having the account open, ranging from $5 to $25 a month, depending on your bank and account type. Here's what your bank doesn't tell you. Most maintenance fees can be waived. Keep a minimum balance, set up direct deposit, use the account a certain number of times per month. Each bank has different rules, but almost all of them have some waiver option. If you've been paying this fee and didn't know you could avoid it, call your bank today and ask them to refund the last 3 months, because many will do it. First-time requests for fee waivers are approved more often than you'd think. Overdraft fee. This is the one that generates billions for banks every year. You spend more than you have and the bank covers it, then charges you for the privilege, typically $25 to $35 per transaction, not per day, per transaction. So if you overdraft 4 times in one day because your bank processes debits in a certain order designed to maximize fee generation, you could owe $140 by end of business. This is not an accident. This is a system. The good news, you can opt out of overdraft coverage entirely. Your card will just decline instead of going through. And for most people, a declined card is much better than a $35 fee. Call your bank, tell them you want to opt out of overdraft protection, and they are legally required to honor that request. Out-of-network ATM fee. You'll often see 2 charges here, one from your bank and one from the ATM owner, and together they can add up to $6 or more per withdrawal. So if you're withdrawing $40, you just paid 15% in fees. Most banks now have ATM fee reimbursement programs, and many credit unions reimburse all ATM fees no matter where you withdraw. If you use ATMs regularly and you're not on one of these plans, you are paying for something you don't have to. Wire transfer fee. Sending a domestic wire typically costs $15 to $35, and an international wire adds another $10 to $50 on top of that, plus currency conversion if applicable. Banks often charge this fee even when cheaper alternatives like ACH transfers are available and would serve the same purpose. Ask yourself, did you need to wire that money, or did you just not know there was a free alternative? Paper statement fee. Some banks now charge you to receive your own financial records, usually $1 to $3 a month. This is one of the easiest fees to eliminate. Go paperless. You'll get the same information online for free, and you can download and store statements indefinitely. Here's the big picture on fees. Every single fee your bank charges is listed somewhere in the account agreement you signed, a document that is typically 40 to 80 pages long, and your bank knows you didn't read it. They're counting on that. But here's the thing, that document is also a contract, and contracts work both ways. Every fee waiver, every refund policy, every opt-out option, those are also in there. Once you know what to ask for, the same document that was working against you starts working for you. If you have a line of credit, overdraft protection linked to a credit account, or any balance-based product tied to your checking or savings account, you'll see interest charges on your statement. And this section trips people up because of one thing, the daily periodic rate.
Banks don't charge you your annual interest rate all at once. They divide it by 365 and charge it every single day, and it sounds smaller that way, which is intentional. If your annual rate is 24%, your daily rate is about 0.065%, and on a $500 balance, that's 33 cents a day. Sounds harmless, but 365 days later, you've paid $120 in interest on $500 you borrowed. And if you made minimum payments during that time, the balance barely moved and the interest kept compounding. Your statement will sometimes show you the average daily balance used to calculate that month's interest charge, and this number matters. If a large deposit or payment reduced your balance partway through the month, your average daily balance is lower than your ending balance, which means the interest charge should also be lower. If the math doesn't add up, ask. Banks make errors in interest calculation more often than they'd like to admit. Here's the section that could literally save you thousands. Most people think bank fraud looks dramatic. Someone cleans out your entire account in one transfer. You notice immediately. You call the bank. Done. That's not how modern fraud works. Modern fraud is patient. Someone gets access to your account information through a data breach, a phishing email, a skimmed card, a compromised website, and instead of taking everything at once, they take a little, repeatedly. $9.99, $12, $4.99, disguised as subscription charges or service fees. They know you probably won't look closely. They know you probably don't remember every subscription you have, so they sit there month after month collecting. This is called microtransaction fraud, and it's one of the fastest growing forms of financial crime. Here's how to catch it. Look for any charge you do not recognize, regardless of size. Flag it. Look for duplicate charges, the exact same amount from the same vendor on the same day or on dates that don't match your purchase history. And look for charges that are slightly off from what you'd expect, like you paid $9.99 last month, but this month it's $11.99 with no explanation. Under U.S. federal law, if you report unauthorized electronic transactions within 60 days of the statement date, your liability is limited. Wait longer than that, and you could be on the hook for the full amount. The clock starts the moment your statement is issued, not the moment you open it. This is why you check your statement every single month, not when something feels wrong, every month, because by the time something feels wrong, 60 days may have already passed. Here's the part nobody talks about. Everything I just walked you through, the fees, the interest, the fraud, the forgotten subscriptions, none of it is hidden in the legal sense. It's all there on your statement every month. Banks don't need to hide it, they just need you to not look. The entire financial services industry is built on what economists call rational inattention, the idea that people have limited time and attention and they'll focus on what feels urgent, not what's important. Your bank knows you're busy. They know you have a job, a family, 100 things competing for your focus, and they design their products, their statements, and their fee structures around that knowledge. The maintenance fee isn't a punishment, it's a bet that you won't notice it, or you'll notice but think it's too small to deal with, or you'll mean to call but keep forgetting, and they win that bet millions of times a day. But here's what changes the moment you actually read your statement. You stop being a passive account holder and you become someone who understands the system. And once you understand it, you can work it. You can negotiate your fees down. You can switch to accounts that are actually designed to serve you. You can catch fraud before it becomes catastrophic. You can stop paying for subscriptions you forgot existed. You can choose when and how money moves instead of finding out after the fact. Your bank statement is not a boring document. It's a map. It shows you exactly where your money went, where it's being quietly drained, and where you have leverage. The only question is whether you're going to use it. And now that you know how to read it, really read it, you don't have an excuse not to. Here's what to take away from today. 1. The header and balance summary are your orientation. Always check the statement period, account type, and verify the math. 2. The transaction list is your record. Go through every line. Flag anything you don't recognize. Patterns are more important than individual charges. 3. Fees are negotiable. Overdraft protection can be opted out of. Maintenance fees can often be waived today. Make one phone call this week and ask your bank to refund the last 3 months of fees you didn't know you could avoid. That's your one action for today. One phone call, it takes 10 minutes, and the average person who makes that call gets back between $40 and $90 the first time. That's not life-changing money, but it's your money. And once you start paying attention, it adds up. Pull up your last statement right now, not tomorrow, right now, and go through it the way I showed you. If you found something surprising, a charge you didn't recognize or a fee you didn't know you were paying, drop it in the comments. I read every single one, and your experience might help someone else catch something they've been missing for months. If this video changed how you look at your bank, share it with one person who needs to hear it. Not because it helps the channel, but because this is exactly the kind of thing that nobody teaches us, and we all deserve to know it. The next video is going to go even deeper. We're going to look at how banks decide your credit limit, what signals they're watching on your account you never agreed to share, and what happens to your financial data after it leaves your statement. You won't want to miss it.